So it's based on the broader concept of internet capital markets. So internet capital market states that anyone can get listed, that is launch a token on internet, and they don't have to go via the traditional gated capital markets like NYSE. So I think like even like MetaDAO is a good example, like where Mountain Capital launched like directly on the internet instead of like going via the traditional route. So internet capital market is all about that. Now coming to attention capital markets, I believe that all meme coins or any types of tokens on blockchains are essentially attention assets. So price and volume directly determines how much attention someone would get. So for example, if something has like very higher attention, it would, the number would go up, and also the volumes would keep rising. So like they are directly correlated. So attention theory is basically that valuation of any assets, like be a meme coin or even like a stock like Nvidia, is dependent on two things like fundamentals and attention. For a meme coin, like fundamental is close to zero and attention is the maximum component. But for something like Nvidia, like fundamentals would be a major component, but still there is a attention premium. For example, the Nvidia stock was rising a lot when there was a GPU shortage, and everyone wanted that, okay, like Nvidia is the way to get the upside of all the AI attention. So we are now living in an attention economy. If you see like things like TikTok and other social media platforms, their revenues are directly correlated to attention. So if they have higher attention, they would get more platform revenue. And now we have like less than 3 seconds to get any user attention. And with the rise of AI, the cost of production of from code to content, everything is declining a lot, and the attention is becoming more and more scarce. So here, if you see like meme coins are one way to speculate on attention. So the magnitude of an attention is directly correlated to the market cap of a meme coin. For example, if let's say something like Moodeng is like going very popular on internet, then theoretically the attention would be very high, and the market cap of meme coin would also be quite high. Obviously, like there are some I would say anomalies in the market due to, like for example, due to insider and cabals, and also I would say market misstructure. But overall, this theory like broadly tends to be true. And now with declining attention spans in crypto, like we are seeing like higher speculation velocity. For example, earlier a meme coin meta used to last for few days or even like few years. For example, something like Dogwave had a attention span of 5-6 months. But now something like Libra had just like it went to $1 billion and then came back to like 300-400 million dollars in just like 2-3 hours. So I would say overall the attention spans in crypto are also declining, just like it did for the internet. And this also leads to like higher speculation velocity. So once the attention span keeps declining, the amount of rotation of capital would also increase. And I would say like now we are at a inflection point of number of tokens launched. For example, even if you see the broader graph, like it has been rising broadly to the up only. And I think like eventually like it will go up to, let's say, even million tokens per day. I think like it's like the YouTube moment for tokens, where initially there were like fewer videos being launched, and then there was like all at once. So I think like the number of tokens would keep increasing exponentially from here. And on the implication of attention capital markets, like this would lead to more and more speculative consumer apps which would be using attention assets. So I think Pom.Fund live stream was one of the example where during the live stream, like anyone can tokenize their live stream, and if their live streams are fun or something like even like cringe, or which essentially gets attention, the token would rise up. So I think like it's a very good combination of like using attention and then also attention assets and building a consumer app. And another is like time.fun. So time.fun is basically essentially tokenizing your time, which is also equivalent to attention. And here you can see like creators can also earn money from the LP fees and so on. So like it kinds of lead to a sustainable business model for the creators. At the same time, like don't have to like charge for subscriptions and all that. So I think like time.fun is also a very good example of attention capital markets. And then there's Kaito, which essentially directly quantified how much someone is getting in a crypto Twitter. So I think like it's also a very good way of like quantifying how much attention someone has got. And now like a lot of vertical platforms are getting built on Kaito, where you can long and short attention and so on. So I think like now people are even tokenizing Kaito's mindset. So it's like basically essentially tokenizing the attention, and it has now lead to a new term called InfoFi, which is like information finance. And if you see like this chart, like this is like all the consumer apps on Solana. So on the y-axis, you can see that there's like social component, the whatever attention or utility that has, and then there's like finance component in the x-axis. So Pump.Fund is on the top right, as you can see. So Pump.Fund is a very good example of like how they are capitalizing on attention. At the same time, it's very speculative in nature, and that's the reason like it's one of the most successful crypto apps of this cycle, because they have utilized both these components very well. And there's something like, let's say, Radium or Jupiter, which is like very finance oriented, speculative trading oriented, but they don't have like much of attention or utility component to that, like just like other social apps. So if you combine both of this like very well, I think like you can get a very good example. And even like if you see like Time.Fund is also something which is like on the top right. So I would say like if someone is building on this theme, you'll have to like do a very good blend of that. And another like thing to observe here is that as like the apps gets more speculative in nature, the shorter the life cycle of the app. Pump is kind of an exception here, because like in Pump there's an infinite content flywheel. You can like keep tokenizing things one after the another. So that way like it has a very higher life cycle. But in general, more speculative the app is, shorter the life cycle of that, because it goes viral very quickly and then also dies out very quickly. So now what's next? What's next, or what are the implications of attention capital markets? So I think like now we'll start seeing like more and more experimentation around vertical pump. So just like fintech was basically unbundling of a bank, I believe that like right now all the consumer apps would be unbundling of pump. So there would be like different curated pump funds being created, or basically like someone with something with different mechanism. For example, something like Cloud, which is now Believe, like they are now uh, uh, hinging on the idea of that like you can tokenize any particular idea, or you can even like tokenize if anyone has put any idea on Twitter. So I think like that is like kind of a vertical of pump. Someone can also create a pump, but for music. Someone can create even pump, even like if you see Time.Fund is essentially pump, but for individual creators. So I think like the verticalization of pump would happen throughout this year, and more consumer apps would be essentially pump, but for different verticals. And I believe that meme coins or attention assets are here to stay, and they are already like kind of growing exponential. I don't think like they are slowing down anytime soon. Obviously, the metas and the form factor will keep changing, and more they will be integrated into the consumer apps. But broadly, the meme coins or the token or the attention assets or content coins, whatever you call it, they are here to stay. And with like AI and the rise of vibe coding, I think like the cost of production is declining a lot, and getting attention is becoming much more difficult. So I believe that like it will also lead to something called app coins, which is essentially like if anyone is launching a coin, they would launch with launching an app, they would launch it with the coin as well. So that will enable them to get more and more attention. If the token goes up, like it would help the app in the distribution, because more and more people would be interested. Everyone would be talking about it. It would be trending in the deck screener, bird eye. So I think like more and more people would be launching their apps with coins, and this will also lead to something like this apps would go viral for the 4 or 5 days, and then it will die down. So it would go very quickly viral, and then it will die down. And since the cost of production is declining, this is now feasible. Like earlier, it wasn't feasible that you can't build an app which like lasts for just 4 or 5 days. But now, since the cost of producing apps are very less, so everyone would be just building apps to get attention very quickly, and it generates like few $1 million, and it dies down. So I think like Dev.Fund is like one of the examples where it's like building in that direction, where you can just vibe code any app, and then you can associate any token, and you can associate an existing token or launch a new token for it. And I think like that has led to like some random apps being built, and all of this like tokens even go to $3 or $4 million and then die out, or even like some of them even stay over $1 million. So I think it's like one of the good examples of how it has like leveraged vibe coding plus attention tokens. And I think like today only like Believe was launched, which was essentially cloud. So I think like it's also like you can post an idea, and then like you can raise for it like and via trading volumes. So you earn via LP fees, and then like you can use that for building your app. So I think like this is also like one of the cool concepts where you can raise on an idea and use like the attention assets uh, for growing your app. So yeah, that's the broader theme, that like agents and apps. So I think like this year, like we'll see like a lot of apps getting built on Solana, and like everyone would be launching token. And we already saw some glimpse of it with agents meta, where everyone was launching agents with the token, and that helped agents go more viral. For example, agents like AIXBT, Zerebro, they got viral just because like they had a token associated with it. So I think like yeah, this overall the broader theme would be agents and apps for this year. For example, in the Hawktua case, I feel that it was like market misstructure. The basically the tokenomics wasn't that good, and also overall the token launch was like kind of a disaster. So I think like that's the thing, that currently I would say the market misstructure is like quite high, and that's the reason there's a deviation from this theory. And even like for example like something like Libra, I think like the market misstructure, like there were like a lot of insiders who were dumping tokens and all of that. So I think like that's why like there needs to be like more and more experimentations around different mechanisms. And that was my theory on like basically verticalization of pump, that someone would start like doing like pump but with better mechanism and so on. So I think like at then all launch pads right now are pump but with different mechanisms. So and on like why celebrity coins didn't take off, I believe that most of the celebrities didn't put like lot of efforts. If they had put lot of efforts, for example, when Mother was putting effort, the Mother token was like up for like 3-4 months and so on. Like it was quite relevant. It used to do $10 million volume each day. But as soon as she stopped putting efforts, I think like the token has been down only, and the volumes have also gone down a lot. So I think like it's all about like how much effort a celebrity is putting to get that attention. So at the end, it has to tie to token. It isn't like directly tokenizing their attention, but it's also about like how much effort do they put. So for example, Trump put an effort to have a dinner for top 220 holders, and the token went up. So I think like yeah, it's all about putting an effort to get the attention. I think having like if the token is very much integrated into the product, then it essentially helps the product, because like there's a flywheel there. But of course, like token is itself a product as well, so you have to manage that. There's a community for it, so obviously it's not that easy. But I think like at the end, if you just like tie the token very closely with a particular product, then the community would won't have like much of expectation, and they would just like hinge on one particular product. And if it goes viral, it's fine. If it doesn't go viral, like then people won't have much of expectation. So I think like it's all about expectations and how you manage. So if the expectations are managed well, I believe that like you can manage both token and product simultaneously, and if they are very closely tied with each other. I think it's fine, unless if you have a vision in mind. I think like it's fine like if you launch a token first and use that for bootstrapping both capital and attention. So I think like yeah, as long as you have a vision, I think like it's completely fine. Most of the products here doesn't have a long-term vision. I think like that's where the problem starts. But I think like yeah, it's like basically 2017 ICOs era, where 98% of these projects will fail, 2% will succeed. So I think like yeah, at the end it's all about how much experimentations people will have. And I think like when people launch just tokens early, generally it leads to something more experimentation than going via VC funded route, because there people generally become lazy, because you have like 8-9 months to launch a product, find a product market fit and so on, and you have millions of dollars in your bank. But here when you launch a token, there would be like community who would be like who would be telling you every day to work harder, and why token isn't going up. So I think like at then you are always like on the toes, and you will be working much more harder, at least for the first few months. So if you find a product market fit, then I think like the token would even the chart would eventually be a good. But if not, I think like most of the tokens will die down, and that will be for 98% of the cases. I think revenue sharing is something like which should be implemented. I believe like when you don't have like lot of room for growth. If you have a room for growth, I think like then there shouldn't be revenue sharing. Like I think like once you have entered a phase where your products are mature enough and you don't have a lot of room to grow, I think like then revenue sharing or fundamentals would kick in. But even for stocks, I believe like early on, like no one even focuses a lot on giving dividends and all of that. So there's always a saying that like you should use most of the revenues for growth instead of like giving out as dividends. So I think like same thing applies here as well. Initially, most of the people would be just focusing on growing the products and just having more and more attention. Later on, I think like fundamentals can kick in, where you are doing revenue sharing and buybacks and burn and so on. But I think like yeah, on early stages, like this shouldn't be like a concern for any token projects, I believe. Yeah. Okay then. Thanks for listening to me.